Ring, ring, ring! Happy Saturday, everyone, and welcome back to the Krown's magical crypto cave.
Well. Welcome back to Krown's Crypto Cave. Wasn't expecting that one. Kind of a little bit of a surprise there, Mrs. Elsa, but thank you for that. And I do want to wish you a nice and happy and healthy, what is it, Saturday? Yeah, hey, have a happy and restful Saturday morning over here. Bitcoin land, a little bit lackluster in its movements. So we got a few things to talk about, following up from yesterday's video and yesterday's live stream as well, of course, as kind of the trade idea that I postulated yesterday is still very much active. And, well, now we get the next step on it, I suppose. Anyways, because it is a Saturday, I'll be going over mostly just the lower time frame stuff, because realistically, the higher time frames have not changed all that much. If you want a more in-depth look at that, definitely go check out the playlist titled Long-Term Analysis. It'll go into more in-depth than that, and then I'll probably do another video in that playlist tomorrow. So with that said, I do want to wish you the best, also the happiest of the happiest. Let's get into the live scene, and I do have one more announcement, of course, as I keep on forgetting to talk about this in the sense that I have a sale going on right now, but I keep on forgetting to mention when the sale actually ends, and the sale actually ends tomorrow. Tomorrow at whenever the clock strikes midnight for you, on Sunday, that is, you know, in case there's any sort of people in a different dimension. Well, Sunday, we're talking about the 8th of September. Anyways, no, yes, 8th of September. Just making sure my computer's date is in such weird arrangements right now. Anyways, the code is OLD20 in all capitals, OLD20. That goes for all the programs with all the payment plans. I do offer payment plans all the way up to about 10 months for the technical analysis plan, which is essentially the all-encompassing program that doesn't just go over technical analysis, but also risk and position management, also understanding underlying market dynamics, and then, of course, access into the members Discord community, plus access to 2 proprietary indicators. It is a 35-hour plus long program. So as always, you know, the big thing for me is that if you're considering getting into it, make sure that you actually have the time to put into it. Otherwise, just, you know, it's probably don't need it if that's the case, right? These programs are designed more in a more serious and dedicated way for people who typically want to do this, you know, as a living. Of course, I do have my technical analysis 101 playlist, which is 100% free on YouTube. Make sure you watch that one first. Make sure you take advantage of that first before you know, perhaps considering something like this, as it's going to be a lot more in depth, a lot more rigorous, and it's best to just start off with some light, just to make sure that it's a good fit to begin with. The options program is similar to that, but just with regards to the derivative products options, something that's a little bit near and dear to me, is that's what I spend, well, most of my professional life doing as a market maker in equity options. It is again a 35-hour plus long program. It's more rigorous than the technical analysis program, in the sense that I think people pick up technical analysis more readily, you know, at first, whereas options, there's a little bit more of a learning curve. So I would suggest that going through the TA program first, if you are, you know, if you're questionizing it, I suppose that would be the best way to do it, as options are going to be more, they are incredibly powerful, but they're going to be, you know, they're going to require a little bit more from you. And of course, understanding technical analysis will only make your options trading, you know, better. The Joule Indicators is not a 35-hour plus long program, more instant gratification, just with access to 5 proprietary indicators and then videos on how to use them. So it's just, it's a lot more light, I suppose you could say. And with all of that said, I suppose I'll take it off right there. There's the code. Let's actually talk about some goddamn magic into money, because I am very much intent on what we're going to see today. Bitcoin mostly sideways here since we last spoke, and that's a big thing right now for Bitcoin, because as long as Bitcoin goes sideways here and just doesn't break the 200 exponential moving average on the 4-hour, like I said, it will be inevitable that we actually do see these guys get the golden cross on them. And the reason why the golden cross is important is because the golden cross in the past prior bull markets has produce some pretty massive gains in price action, typically about you know, anywhere from like 50 to 100% over the course of, you know, 3 to 4 months after getting the cross. Let's actually just go through it really quick right now. So I haven't done it in a long time, so I do want to kind of go back and get a bird's eye view of what these crosses have done in the past, so that we can kind of expect or get an idea of what to expect if we see a certain, you know, certain signature going on in the more present times. Anyways, we'll go back to the last switch up from bear to bull market, which was right in over here in whoops, we're not even there yet. Jesus Christ, man. There we go, 2015 to 2016. And you see Bitcoin get its first big pop. We get the golden cross on the 4-hour. That leads us all the way up. Actually, from golden cross to next high, we do have about a 100% move right there. Pretty damn nice. Then get the death cross and play out the death cross for about 2 weeks, 2.5 weeks, it looks like here. Soon after that, golden cross once again, and from the golden cross to the next high, we're looking at about 100% gain in about 120 days right there. We do have a few dramas actually along the way, though, as you can see. We do have a very small one-off right here where it gets death cross for a second, but we never really veer too far away from it. And then I believe, yeah, right before this big explosion right here, they actually come very, very close to touching each other. In fact, I mean, they're basically on top of each other right here, but I wouldn't necessarily, maybe they do actually cross down there. But more importantly, the move plays out as the actual divergence tells you where the real momentum does lie. Anyways, same thing kind of happens on the next little segment right here. Get the death cross played out for about 2.5 weeks into this region right here, and then from next golden cross to high, we do see, or major high I should say, we do see about a 94.5% increase right here. Pretty damn good as well. Death cross, golden cross, this one plays out for about a week and a half looks like, and then we have another pretty massive move leading up to this next high, about 50% on this one, not as much as the other ones, a little bit more of an outlier to the downside. To make sure that I'm recording and my mic's working good. By the way, this is a fresh look on the charts for me today, although I'm looking at historical stuff right now. Anyways, same thing right here. Death cross, golden cross takes about 2 weeks right there, it looks like. And from that one to the next high, if I can find the next high, would be over here, showing an increase of about 170%. So a little bit more on the upper side of the outliers. Get the same thing right here. Death cross, golden cross for about a week and a half there, a little bit of a shorter one. And what do we have on the next move? About 107% move to the upside. And then from there, we get another signature, about a week and a half, 2 weeks right here, from death cross to golden cross, and this one goes all the way to the actual $20,000 top. So it's a 400%. It's almost a 40% gainer right there. I wouldn't necessarily imply that that's what we're doing right now. Anyways, as you can see, Bitcoin is in a macro uptrend right here, and the golden cross did lead us all the way from about 3,500 all the way to, I think we got death cross. Where was it? Yeah, here at about 10,500. Obviously, we did get up to about a $14,000 high right here, and ever since then, it's just been sideways consolidation. So I would say that if we do actually get the golden cross, keeping in mind that the macro trend is still very much to the upside, then, more or less good things typically do happen, historically speaking. And that's also mediated and recognized by the prior times as well. I didn't go over the past prior bull market before, the past prior bull market before 2016 to 2018, essentially. But same sort of results apply. And so to me, that's why I always pay attention anytime that we do get a golden cross or death cross on the 4-hour time frame, especially when it's on the same side as the macro trend. In this case, again, to the upside is what we're looking for. And as long as we hold up above this purple 200 exponential moving average right here, we will actually get the golden cross at some point in time. Now, obviously, the more that we actually diverge away from that on price action, the sooner it'll happen. But it was a pretty damn, I shouldn't say that it's normal, but it's certainly within the realm of possibilities that when you're looking at a potential golden cross in the making, as we were yesterday, a lot of the times you will come back down and test that cross just to make sure that everyone's on the same page. And the real insight is to see whether the bots and algos actually support it. If they do support it, then that tells me that they want to be on the buy side of it. And if they want to be on the buy side of it, then they actually want to play out this cross. And if that's the case, then I would be looking for this to actually, grind this area out, get the golden cross, and then force its way back up to about 11,000 and probably beyond to 11.5 region. But that also does mean that if we break the 200 exponential moving average to the downside, then they are not protecting it. And no, this is not a break right here. We need to see an open and close below it. Although the next close below it probably going to look a little bit more nasty. And if we get just one singular close below both these guys, that would probably do it for me as well. Though technically you want an open and close if you want to be super conservative. Anyways, in this region right here, you can see that if we do break to the downside, then I would be looking for a move first and foremost to about 98.50 right here, and then probably just straight to the downside of the range after that, after a small bounce down to about 95, maybe 9600 in this region right here. And this whole formation would start to look a lot more nasty. And the reason why that is because we are, at the end of the day, still in a massive descending triangle, which is typically a bearishly resolved formation. I mean, more often than not, it will be resolved to the downside. And as long as we're holding this 9,500 support base right here and below this 11,500 resistance right here, it's very much in the charts. So that's always going to be a consideration. The downside danger, I suppose, is very much present as long as we're within this formation right here. However, I would not play it until, just like at 6,000, we had to wait for 6,000 to break. Need to see this 382 Fibonacci retracement right here correlating with all of the last 4 lows at this 9,400-ish region to break before I start to really look at these massive downside moves as tradable. For right now, it's just a potential. It's a setup that that we can discuss, but it's not actionable as of this moment in time. But if we do break to the downside, technically a measure move all the way down here towards about 6,600. Very, very nasty. Now, there likely would be bounced along the way, 8,900, then 8,500 right here on the 200 exponential moving average, which would also fill a gap for the good old gap boys on CMEs, June 13th. And then we do have the 200 simple right here, kind of correlating with this 75, 7,600 support. And then, yep, all the way down, likely to 66, 67. We do see that this triangle does have an apex coming in about early October, so that does imply resolution somewhere around here, around middle of September. So anywhere around the 15th of September, I actually would be looking for resolution on this whole formation, as not only do we have structurally speaking, it becomes extremely likely to break. We also do see volume signature getting extremely small here, which tells me that this is running out of room. And where do we kind of come to an apex at? 15th of September. Not only that, but looking at historical volatility percentile, we are still very much contracting here. And if we kind of highlight the middle of September right here, you can imagine that really puts us into a position where, historically speaking, we've seen major, massive moves emerge from this last time in May. This was this massive base before this explosion, about $6,000 higher. And the time before that was actually on the the 3,000 level before the massive move to the upside. So all those things are suggesting around middle of September. Not only that, but we do have economic events. We have the U.S. Fed meeting, which are expected to cut rates by about 0.25%, I believe, and that means that if they cut rates by 0.25%, we probably see very little action precipitated off that. If they cut it by any less, we will likely see Bitcoin go down. If they cut it by any more, then we'll likely see Bitcoin go up. And the thing with these events is that when you do have the expectation going into it, the expectation, if it is met, usually it's already priced in. So keep that in mind going in. The expectation right now is 0.25% down. I wouldn't say certainly not most of the world, but certainly some first world countries are going into negative rates right now. In Japan and Germany, that means that you pay money to put money into the bank. You give the bank money. Like, you don't just give your money to the bank to put in the bank to hold it. You're paying them. You're having an expense now. Although it's probably not, it's really not that much. But that kind of just shows where this economic world is kind of headed right now. So that's a little bit more of a fundamentally bullish thing for Bitcoin. The more that they lower the rates, just the more that they can print free money, essentially devalues the currencies. And well, that's where people start to switch on their brains and likely say, oh, okay, well, they literally just, the government, without me doing anything, has made my money worth less. How could I protect myself against that? Well, typically people are going to think about something like gold, but now I think that Bitcoin's kind of in the discussion. Certainly not as much as something historical like gold, but Bitcoin now kind of has you could see that people would likely start to see the value in Bitcoin if and when we do have a situation like that, especially if we were to get into negative rates here in the United States. Anyways, so yeah, as long as we're within this descending triangle, this is always going to be a consideration. It's always a present danger for the downside. Again, it's more likely to break out to the downside than the upside. Doesn't mean it's going to break out to the downside, but more statistically likely to. So I would look at this as actionable if we could actually close a daily little below this region right here, also correlated with the 382 fib. By the same token, could we break it out to the upside? Certainly, yes. I mean, as long as we're within it, and we are in a macro uptrend, it certainly does diminish the probabilities that it does break to the downside. So there is some hope, no doubt about that. But I need to see, first and foremost, a daily little close above this area right here, this top resistance, which also correlates with the 0.5 Fibonacci retracement. But that actually wouldn't do it for me to be fully resolved to the upside, and target moves towards like 14,500, 15,000, whatever it ends up being. Just general upside at that point is kind of what I've been saying. But yeah, if we do get that, then I'd really want to see actually a higher high printed above this guy right here, because any breakout above these above these counter trend formations, they are highly probable for fake outs. And you could get a little bit of a break right here, get front ran from this prior high, and then just shoved right back down. We have a great example actually going all the way back in what was it, somewhere over here, yeah, July of last year, 2018. Everyone was talking about the falling pizza to the downside, and that we actually broke it out to the upside right here. Well, we did break the trend line, but we never broke above a prior high, so nothing really changed, right? Anyways, so yeah, beware of the fake outs there. But right now, we're not really anywhere near even tested it. So, it's not too much of a consideration. We do still see daily oscillators to the upside. We see daily Stokes to the upside. We see daily RSI actually still using the exponential as support. I do like this right here. If there is a little bit of hopium on the board, there's certainly some hopium present. Don't get me wrong for the bull case. Even with the advent of the powerful price action last night, with failing to actually break these guys thus far, I would say that the more and more that this grinds out sideways, the better it does look. Oh, and for full disclosure, I am long, by the way, so I need to explain this again because I spoke about this last night on the uploaded video, but this was essentially my trading, right? So I was long coming into yesterday. From whatever these maybe a little bit lower on the December futures, whatever it was. Anyways, once we got up to 10.8, 10.9, I started covering by selling calls against it, like expiring this week at the 10,500 strike. Once Bitcoin violated this area to the downside, what was it? It was right here, this trend line right here that I had in. We spoke about this during yesterday's live stream, right here at about 10.7, a little bit above 10.7. As soon as we broke that to the downside, not even closing, but just ticking below, that's when I took off my position and actually took profit on a lot of this position, and then slammed the 10,000 strike calls and sold that against it to cover my spot long. Then what I did is once we came down to the 200 exponential moving average, I actually bought this area, and I bought more down around the 10,250 print right here. The reason why I did that isn't because I'm convinced that Bitcoin's going to flip around to the upside here, but it's just a trade setup in the way that I look at it. The 200 exponential moving average is a very, very obvious and easy way to kind of be managing this one going forward. So I'm happy to hold on to that because remember our discussion earlier that as long as that cross gets respected, well, then typically good things happen, historically speaking. So what I did is I got in as close as I could get in order to kind of decipher if I was going to be wrong in this trade. So again, this is exactly what I look for in a trade setup. We have an obvious support right here. We have an obvious area of inflection right here in a sense as well. And the second that we actually break to the downside, well, just take my loss, and basically and because I was able to take profit on my position before and sell those calls against it, I'm actually going to be making money on that. That's just the beauty of options. But if we actually do reaccumulate here, go sideways for a little bit of time, and then get the golden cross, and then work our way back up, then, well, now I have a nice spot long position, and I'm exposed a little bit to the upside. Again, I'm actually about 500,000 long right now, which I was not expecting to see, but fair enough, with an average price of about 10,466. So yeah, I did those December futures somewhere right around here at the 10,250-ish tick. So right now I'm happy to let this one play out. It's kind of like a free roll in the way that I look about it. If it does end up going against me, I probably will end up taking like a little bit of a loss, but I'm happy to take a loss on that trade, on that specific trade, because I basically pulled in the gains right on over here once this area was kind of negated. And then on top of that, when I sold the calls against it, well, those have been decaying in my favor as well. So it offers me up, well, even though I'm going to be losing on that specific trade, or presumably so, I'd actually be making even more on the options side. So it would actually work out in my favor overall. And again, that is just the flexibility and beauty that options give. Like I said, options much more dedicated, much more in depth, but that is, in my opinion, the most pressure way off to trade. Pressure off way to trade. My God, man, I must be super dyslexic this morning. Anyways, let's go check out the expected moves chart. I'm curious what they're doing right now. Come on, reload it. Where'd it go? Is it dead? Did we dead? Yeah, we're there. Okay, great. Looks to me like the bottom side of the first standard deviation coming in a little bit lower than yesterday's low. I'm surprised to see this. We are squeezing down right now as well. This would be suggesting down, to be fair. This would be suggesting down. If we do pop up, 10.6 can be strong resistance at this top of the first standard deviation, and again to the downside, 10.150, and this would be squeezing down. This would be bearish here. So that is certainly leaning on the downside, but like I said, that to me is actionable once we actually break this area right here. Then be looking for a bounce somewhere down around here, but the bounce would likely fail, and we'd likely end up back down at our lows, 94, 9,500, and at that point, coming back down to the lows is the danger zone once again. Could I buy it again? Yeah, maybe, but how often do you touch the fucking support 5 times without breaking it? Not often, man. So I'd say the probabilities of that working out again greatly reduce. And, you really have to realize that this is, just another lower high at the end of the day. if that were to happen. So that's kind of what's at stake right now. Anyways, the thing is that all lower time frames, like our 4 hour and under, the oscillators here are quickly nosediving as Bitcoin is really unable to break this support as of now. Again, it still has a little bit more room, but once the 4 hour Stokes get down here, and if they start to turn, we're actually going to see all the lower time frames likely turn with each other. It's going to take its time, right? But if we were to see something like that, just by the nature of Bitcoin going sideways, that's going to allow all the lower time frames to reset, and well, then if they reset, then they're going to be set up. We see 3 hour Stokes actually looking like the one I've crossed the upside. I think that this one probably gets faded though. I think it's probably going to end up being a false positive. 2 hours probably having a little bit of a baby one. Yes, it is. And hourly is already up there and looking to cross down. So we see bifurcation between all these guys. More importantly, we see bifurcation between the lower time frames and then our 12 hour, which has been so generous to us recently, crossing down as well. And then the daily obviously still up. So we see everything bifurcated, which tells me that we're likely to go sideways here. We're likely to go sideways. And that in sideways would actually be more beneficial for the bulls right now as we let these moving averages kind of catch each other. But it's a ticking time bomb. If bears want to destroy it, they really don't have to go too far right here. If they do it, like I said, there's short plays on the table very easily. By the same token, I don't think that the bulls are really out of the woods. I mean, they're never really like out of the woods until we're like above the 12,000 prior high, right? But on the lower time frames, I'd say that the bulls are once again in control of the lower time frames. We can regain this 10,550-ish area right here, just synonymous with the white 200 simple on the 4 hour. If we can start opening and closing 4 hour deltas above there, I believe that we'd likely float our way back up to 11,000 and probably like 11.5 over the next week or so. So things, this is what's at stake right now. Either basically $1,000 move to the upside or $1,000 move to the downside from this area right here. So that's why I took this trade. And if we do go to the downside, I might even take a short off that. I'll probably end up doing it with options, but there's enough edge on this trade from this region to put on a short, in my opinion. So again, about $800 to $1,000 potential profit, pretty damn simple. I think very much worthwhile. Anyways, okay, cool. So we spoke about all of that. I'm curious how the crypto fear and greed index is doing right now. We did take down a little bit from yesterday. We were at a 43 yesterday. We're at a 39 today. Still really stuck in the fearful zone, which is concerning. I mean, you'd expect this to get picked up if this truly is a bull market. You would expect us not to spend that much time in a zone like that. So that is, certainly on the more bear side as well. So yeah, the whole picture is not so clear to me right now. Looking at the daily, let's see, what do we have here? Well, the full picture is pretty damn simple, but judging like these micro movements in the lower time frames, pretty damn simple as well. It's just like setting up the trade pretty damn simple, but doing the mental masturbation of which way is more likely to go. Nah, man, it's one of those things. It doesn't even matter at this point. Have your risk management set, and there's a pretty damn easy trade no matter which way we break from this area. Anyways, daily still above all major movement averages. To be fair, still above all major movement averages, but it's still above all major movement averages. There you go. Holding the exponential on the RSI, so I think that is constructive, but needs to really prove itself here over the next couple days. 2-day, we do have 2-day Stokes having a fresh cross the upside. It is confirmed. We do see 2-day RSI above the exponential as well. I do like that, rejecting the bearish control zone along the way. Say that all those things are good, kind of line up with each other. 3-day did close last night. We did lose a 10 simple, but did not lose the 21 exponential moving average. So again, if we actually even do trade below yesterday's low at about 10,200, we'll call it, depending upon which exchange you're looking at. Actually, in fact, this one about 10,180, then that would also be good enough for me initiating the downside. If we just ticked below there, don't have to close a dildo below there, just ticking below there is good enough. But 3-day Stokes, I mean, they're literally laying on top of each other, but looks to me like, if we take out the prior low, then certainly it will cross the downside. But for now, as long as we go sideways here, it will hold up there. 3-day RSI, I do not like this actually. What I really wanted to see on 3-day RSI was the falling piece to get follow through by regaining the exponential. That is not what happened. In fact, it looks like rejection of it. So I don't like this right here. This looks like a failure is what it looks like. Not a fan. Anyways, let's see. Okay, alrighty. Let's go over CMEs for a second. Remember, CMEs have closed for the week. Daily dildo close on CMEs is interesting, right? It closed obviously as a massive Darth Maul dildo right here, which is usually pretty damn bearish. But we've seen this a lot in cryptocurrency land where we get these very, very nasty moves to the downside and then no follow through on top of them. Well, I'd say on this one right here, there's a couple competing factors. Yes, we do have that going on. We do have a bearish engulf. I mean, it's technically a bearish engulfing from like a prior prior two bearish dildos to begin with as well. But more importantly, we come down and look at where we come down to. We've actually filled the gap coming in from 1st of September, coming in from last week. So it's very likely to bounce this area. That's also why I bought this on spot, just to play that bounce. So the thing is that do we reverse off this, or do we actually continue back down? The reason why this is important, because if we even just continue back down to the low of yesterday, which, remember, this is not trading over the weekends, but you can imagine that spot prices are going to kind of mimic this, then realistically we're likely to come all the way back down here, 9,500. There's just nothing stopping us from that region, and makes the most sense, and this becomes another lower high, and things start to take on a much more bearish tone. In like the immediate future. So that's, again, what's at stake right now. But for now, I kind of look at it as a gap fill. We pop back up. So I'm curious how the lower time frames ended. Lower time frames ended pretty anemically. In fact, we actually did close below both the 200 exponential moving average and the 50. Or maybe did we close below the 50? Yes, we did. We did. So this would certainly not be as good, but it's going to be more sloppy than spot prices. More importantly, the weekly really I do not like. The weekly closing below the 10 simple makes this look like a setup for an actual sell-off, like a legitimate sell-off, like an actual resolution of this triangle sell-off. That is concerning as fuck. Now I'd still wait for spot prices to follow. Spot prices are a little bit more obvious here, as there is a premium that basically builds up or declines on futures. So sometimes that'll count for a little bit of differences, but there's no excuses on spot prices. So we will get resolution on this tomorrow night at 8 p.m. Eastern Time when the weekly closes. If we do close below the red 10 simple, I would be concerned. That means that hidden bullish divergence on weekly RSI is completely is negated, for at least for now, and we probably I think that the downside danger would become really big at that point. It's concerning is what I'd say. But of course, if we do end above the red 10 simple, I'd be looking for next week to pop us back up to about 11.5. Actually, this would operate as hidden bullish divergence, and I'd be looking for a move back up to the top side of the range. And then if we do move back to the top side of the range, 11.5, we'd have 3 touches on the top side, and we'd actually be making an ascending triangle. So things would start to look extremely bullish at that point. So we're at a pivotal point, and we are rapidly approaching. I mean, we're literally about 1 week away now. Yes, I'm looking at my phone. 1 week away from from those economic events around that date when it starts to become extremely likely to break. So looking at this right now, this weekly is going to have massive implications with that. Anyways, okay, cool. So we spoke about all of that. Okay, alrighty. Let's go look at Bitcoin dominance. I'm curious how that's doing right now, how that's shaping up. And then I actually want to look at the total market cap as well. Bitcoin dominance on the higher time frames still looking good, but lower time frames looking toppy as fuck. Lower time frames probably do come down. I think that we said it was going to come down to 72.5. We are at 72.87 right now. So I think it's got a little bit of downside here, probably back down to this region right here. So alts likely to get some love in the coming days. In fact, let's go check out our shitcoin index right here. Mr. Cardano, how you doing, Mr. Cardano? Looking pretty good, and as we said yesterday, probably going to pop back up and test 450 satoshis, and I think it's going to have a chance to even get higher than that, maybe even like actually this is like 460, so not too much further off, but around 450 to 460 is where I'll be looking for on this run right here. I don't necessarily think that the pain's over just yet, longer term, but shorter term, I do think that a lot of alts are going to get a reprieve versus satoshis. Maybe not versus a dollar, but versus satoshis. There you go. Anyways, what else do we see? Let's go talk about, let's talk about the total market cap. I'm curious. I very rarely look at this, but I'm just looking for more, for more clues into the price action right now and what we're most likely to do. Total market cap looks nasty here. Losing the 21 yesterday, bad. We are basing on the 200 exponential moving average. So this is completely different looking than spot prices on Bitcoin, which usually this does kind of mimic. But let me put in my trend lines here. And looks like I did have some in before, but time to redraw this, as that is no longer relevant. There we go. One right there, aligning with the 200 exponential moving average on the daily. I like that. We have a little high right there. Let's mark off the high. Just always the easiest things first. I suppose that this could be useful. And there we go. So now we have a nice trading range right here on the daily. Do we have anything else to kind of, be precipitated off of it? I think that we got this low right here, matching up with where we are right now. Technically speaking, we're kind of sitting on support, matching up with the 10 simple. Okay, but pressure's onto the downside here on a formation like this. And if we break this horizontal support, it's going to be back down to this region. And Yeah, we still got the 200x benchmark moving average there, but I'm not a fan of it. Let's look at the weekly as well. I'm curious how the weekly looks on this one. I'd imagine this one looks a lot more like a descending triangle overall, and yes, it certainly does. So, again, really needs to prove itself here. If I'm only looking at the total crypto market cap, I'd actually be bearish on it. Cool. Anyways, GBDC, how did he close for the week? Closed on a down note, but did not break the 10 simple even. Very strange. But does look like it wants to come back down here, to be fair. Man, fucking hell, weekly closing below the 10 simple as well, looking like a rejection. Not good. Not good, man. Not fucking good. Anyways, let's go check out the other top shitcoins versus US dollar and see how they're doing right now, and perhaps they could be a harbinger of justice and peace, or maybe despair. And looking at Mr. Buterol popping back up, so still holding the lows. Again, it can come down and test this region a lot of times. That's okay until we actually break this region. I wouldn't get too too excited for more downside. 166, or sorry, let's make it a little more tight. A daily will close below 168, and I'll be calling a move back down here towards 140, 148, 147 region. But for right now, resilient in this region. And if we actually do break this to the upside, I'd be looking for an immediate move back up to 184, and above 184, I'd start to look towards 205. And I mean, shit, the measure move on this falling pizza would actually be all the way up to 260. So I would take it one step at a time. But yes, it certainly is very much in place. So breaking this 21 would be the key component of that. To really make me think that it's possible. But for right now, I really don't want to see this level lost. If that does happen, I'll be looking down here towards 145-ish, we'll call it. Anyways, going over to look at Mrs. Litecoin. Mrs. Litecoin doing the same thing, coming back down to the last prior relevant level to the downside. And looking to me, this one actually looks a little bit more reversal-ish to me, just because it does have a massive doji dodo, and we have failed to kind of push below the low of it thus far. It looks to me like actually Mrs. Litecoin wants to pop back up to 70.5 bucks, and that probably bode well for Mr. Buterol. They're likely to move together, right? And that kind of matches up with this major downturn resistance trend line here, which would come in right around about 71. If we could break that to the upside, I'd be looking for a full move back up to $80, and it starts to look a little bit better for a potential reversal, and at the very least a nice bounce off the 200x benchmark average, as you can see right here on the weekly. Always going to get some love most likely. So putting in a little bit of a base at this region, okay. If we do break this region, if we do break this next this $63.50 region right here to the downside, I'd be looking for a move actually towards $55. So the stakes are high on this one as well. Big move incoming. Okay, cool. What else do we want to talk about? We spoke about that. Traditional markets closing the week very strong, very, very strong. We closed by the 10 simple on the weekly. We probably come back down and test the 10 simple at around 295 and a quarter, but I think it's a legitimate conversational topic to have, that we won't be coming back down to this 275-ish region. The actual bear trap happens from this region. Now, at first I was postulating that the bear trap likely happens from this region right here, but this is looking better. That was a very good close on the weekly, so it would be unwise for me to get bearish like right now. Until we actually break back down below that 10 simple. But for now, looking better. We probably do come down and retest that region, but I'd actually be looking for some more upside here, perhaps. We see weekly south coming back down to the edge of the bullish control zone, so it looks like they are getting some love in that region, so still working. Weekly RSI back above the exponential, very resilient. To be fair, it looks like I'm gonna be too premature on that one, and we're gonna be going up here. So going back on over to Bitcoin, let's see. Can I wrap this bitch up? Maybe go over the higher time frames just for a second here. Let's go over the monthly, just really, really quick, and then we'll wrap it up. Come on, monthly, load it up, baby. There you go. There it is. All right, beautiful. Anyways, monthly is kind of set up. So here's what's at stake with the overall formation, right? If we do start to break 9,400 to the downside, remember all of those downside moves get initiated, of which we'd very, 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 very obviously break the low side of this whole formation right here. The reason why that's important is because the second that we break this low, there's really nothing from a monthly perspective holding us up from like the mid 7,000s essentially. And more importantly to that, we will actually undo this potential. We will gain divergence between the yellow 21 and the red 10 symbol to the downside in that case. Right now they're converging to the upside. So, if as long as Bitcoin just holds it above, our current low essentially, these guys actually will cross the upside coming into October, and October would likely be a phenomenally bullish month for me if we actually did see the red tensable cross the upside of the yellow 21 right here. The last time that we saw this was back in April 2016, before this massive move all the way from about $400 to $20,000. So again, this is something that I definitely have an intentful eye on, and you'd imagine that as these guys get ready to cross, if you are going to have a bear attack, this is where it's going to happen from. But for now, it is holding, and we see momentum also on the same side as well. Monthly Stokes looking completely fine here, looking very powerful, about to get into the bullish control zone for the first time in well over a year. I mean a year and a half now, it looks like. And this was a big deal the last time we did it, from the last bear market to bull market switch up over here, coming in from this $400 price point all the way to 14,000. I mean, just a few years later. Not only that, but monthly RSI has a very similar signature. We popped all the way back up to test the bullish control zone. First pass gets rejected. We come back down, catch the exponential, and now driving back up to this region actually would signal strength, similar to what we saw here in June 2016, and in a very, very similar signature on price action as well. This producing about a 40 to 39% drop down. And what do we have more recently? Well, we have about a little bit less than that, but about a 35% drop down right here. So very much in line. As I check my timers, okay, 35 minutes, not bad. I think we might actually make this video a reasonable time. Actually, maybe not, because that's probably more around 20 minutes. Anyways, you can see what I'm getting at right there. So, as long as Bitcoin holds this low, structurally speaking, from the higher time frames, which do matter the most, looks good. More importantly, if we go over here to the 2-month, which just 2 months, then you can actually see that we're actually having a fresh cross, fresh stoke cross the upside right here. Very, very nice as well. Do you like that? 2-month RSI looking like it's fighting for the exponential as well. If we regain that, I'd be massively bullish coming into next month if we get the next tick. And then the quarterly, we get a new one in October, and the quarterly is looking like it wants to have a cross the upside as well on the quarterly stokes and on quarterly RSI regaining the exponential as well, albeit a lot less historical relevancy there, just because we don't have too much to really compare it with, but fun to look at nonetheless. Anyways, going back on over here to the 4-hour daily time frame, let's just wrap this pitch up, make it very, very simple. As long as Bitcoin just kind of grinds sideways here and doesn't really have any sort of opens and closes below, especially both these moving averages, the green 50 and the purple 200, or even, you could also use a close below if you want to be more aggressive. I would certainly take some off if we did close below again. But for right now, the more that we go sideways, the more that it kind of just allows our lower time frame oscillators to reset. And if you do see Bitcoin start to regain the white 200 simple right here at about 10,550, I actually would be looking for this to just float its way onwards and upwards higher. By the same token, if we do break this area to the downside, I'm looking lower, 9,800 and probably even 9,500 after that, after a failed bounce there. And at that point, we're going to be in the danger zone, and real downside considerations will be had at that point. It's going to completely change the way that we look on the weekly, and things would start to look a lot more nasty in like an actionable way in the immediate future, of which we haven't had like a major massive girthy move since really June. So anyways, with all that said, I'll leave you off right there. Of course, I want to remind myself to talk about the programs. They're all on sale for 20% off. That goes until tomorrow night, so no rush, but you want to make sure that the people who are interested in that do have full information. So I'll leave it off there. I do want to wish you well. I want to wish you a very happy and profitable and just peaceful, man, to have a fucking relaxing Saturday. Hope that Bitcoin just goes sideways here if you are bullish, and look for the massive girthy red dildos if you are bearish. Anyways, that's going to do it for me. Take care and see you soon.